Man, look at this audio console sitting on my feed right now. $5,000 for a synth, $12,000 for a mixing board. Guys in the studio flex this stuff like it is a chain or a high-end watch, you know?
It is a total lifestyle flex posture universe. But from a balance sheet perspective, if you buy a $12,000 console and do not understand tax code, you are just bleeding capital. Most indie creators write that off slowly over 5 to 7 years through standard depreciation, which is a massive mistake.
Wait, why wait 7 years if you drop the 12 grand today or right now in 2026?
Exactly. Under Internal Revenue Code Section 179, the tax code actually lets you write off the entire cost of qualifying equipment in the exact year you purchase it, all the way up to a limit of $1.25 million. So instead of taking a tiny fraction of that console off your income this year, you take the full $12,000 hit against your profit immediately.
Man, I wish somebody told me that back when I moved down to Florida. I was starting from dead scratch, right? I spent thousands on studio monitors, interfaces, acoustic pads, all on personal credit cards, paying like 22% interest. I had no clue what a Schedule C was or how those deductions actually wipe out your self-employment tax liability. I was just drowning in monthly card payments thinking, man, making music is just expensive.
And that interest you were paying was completely unrecovered money. But here is the other piece that most producers miss when they are buying smaller stuff. You do not even need to file formal Section 179 election paperwork for every microphone or plug-in pack.
Wait, what do you mean? How?
It is called the de minimis safe harbor election under Treasury Regulation Section 1.263A1F. According to tax guidance from Reed Corporation, any single piece of equipment or invoice under $2,500 can be expensed instantly as a routine business expense. Mics, acoustic panels, software licenses, DAWs. If an item costs under $2,500, you just deduct it directly without complex depreciation schedules.
So, if I grab a $2,000 microphone and a $1,500 outboard preamp on separate invoices, both of those qualify under that safe harbor instantly.
100%. They bypass standard multi-year asset tracking completely as long as you maintain proper receipts and clean books.
So let us break down the actual cash math on this, because I want creators to see how this puts real money back in their bank account.
Right. Let us say you are a producer in a combined 25% tax bracket considering federal and self-employment taxes. You buy $10,000 worth of qualifying studio gear throughout the year. If you write off that $10,000 immediately, you reduce your overall tax liability by exactly $2,500.
$2,500 in cash you do not have to hand over to the government at tax time.
Right, but here's where 99% of artists mess up. They get that $2,500 tax offset and immediately go buy a new lens or another synth. They treat tax savings like free casino money. At Currency Development, we preach capital deployment. You take that $2,500 in tax savings and immediately put it into dividend-paying index funds or business cash reserves.
Man, that is the shift right there, moving from just consuming gear to building true assets. But DZ, what happens when the IRS comes knocking and asks if that $10,000 setup is actually a real business or just a very expensive hobby?
That is the audit safeguard you have to lock down. The IRS loves to target creative home studios because people mix personal and business use. To protect your deductions, step one is running every single purchase through a dedicated business LLC account, never your personal checking. Step two is keeping a detailed asset log with serial numbers, purchase dates, and clear documentation showing exclusive business use. If your studio space doubles as a guest bedroom or a gaming station, the IRS can disallow the space and reclassify your operation as a non-deductible hobby.
Yeah, and once they call it a hobby, all those write-offs vanish and you owe back taxes plus penalties. That is brutal.
It destroys people. So here's the action step for every independent creator listening right now. Go audit your gear receipts from this past year. Calculate your exact tax offset savings using Section 179 or the de minimis safe harbor. And when that tax saving hits, do not buy another shiny toy. Commit to reinvesting every single tax dollar saved straight into high-yield dividend ETFs or income-generating reserves.
Turn that studio gear right off into real wealth. Stop flexing the equipment and start owning the capital. Great stuff today, man.
Money trees ain't just about green, it's about roots, branches, and building a team. Protect what you plant, let the next gen eat. This is real talk, where the hustle meets the beat.
Hey, no, it's deeper than the chains in the fame fan. DJ Universe, Zygos in the game plan. Clone wars, but the knowledge that's the real clone. Blueprints get passed down like a family home. From basements to boardrooms, beats to trust funds. Rap royalties to assets, we touch funds. Talking about a legacy, not just a check. Own your master, son. Don't sell your respect. Financial lit in the cipher, breaking bread with the wise. Street smart meets Wall Street. Watch the empire rise, not just bars. It's a balance sheet anthem every episode. Get a jewel, then stand on it.
Secret hip-hop meets the hustle for generational wealth. Pass it down right off. Or they pass away broke. Or they pass away broke.
Money trees ain't just about green, it's about roots, branches, and building a team. Protect what you plant, let the next gen eat. This is real talk, where the hustle meets the beat.
Clone War spinoff with DJ Universe and Dangerous Zygos. The Clone War spinoff with DJ Universe and Dangerous Zygos.
Money trees ain't just about green, it's about roots, branches, and building a team. Protect what you plant, let the next gen eat. This is real talk, where the hustle meets the beat.
The Clone War spinoff with DJ Universe and Dangerous Zygos.